Hey guys, welcome back to our session. We are starting 1 minute early. We have the CEO of Fairmint with us, and he'll be doing a talk around fundraising in crypto during a recession, how to leverage future revenue to raise funds. Do you mind giving a quick intro on yourself and also your company, like some of your investors and things before you dive in?
Sure. So hi everyone. My name is Thibaut. I'm the CEO of Fairmint. So I'm a software engineer by trade. I also have a master's degree in corporate finance, but mostly all of my life has been an entrepreneur. And so I'm one of those guys who lost all its Bitcoin on Mt. Gox in 2014, and I retaliated by coming back and developing on Ethereum in 2016. And since then, like I've been like deep diving on in crypto. Published a white paper, like a continuous organization white paper in 2008, and from that white paper, this is where Fairmint was basically like the origin of Fairmint. So today I'm gonna perfect. That you hear me, that's perfect. So today I'm going to present to you like very quickly. So what really Fairmint is doing, like how continuous securities offering works, and how we enable like companies and projects to like raise funds in a completely non-dilutive way by leveraging their future revenues. So let me dive immediately. And so what I'll do is like do quick presentation, then I'll do a demo to give you an idea of how it works, and then like fire away all your questions you have, and I'll answer all of them with the best of my ability. So let's remove my face and let's go right into it. Okay, so Fairmint. So Fairmint were like the first like software-based financing service, so completely based on DeFi. Even though, as you'll see, like one of our goal is that nobody should even realize that it's based on DeFi. So behind Fairmint, like we're today was a 7-person team. So not all of us are pandas, but we have a lot of pandas. So the two co-founders are so Joris Delanoux, my friend and co-founder, and myself. So like we're two former entrepreneurs. Like I had a B2C company, he had a B2B company. We both so I raised capital, he never raised capital, but used like debt to finance his businesses. And both of us basically we always experience like how painful it can be to like finance your growth and finance your company. And if there's really one thing that like we definitely agree, and I think a lot of you will agree on, is that fundraising sucks, right? And so this is why like this is really the pain that Fairmint was wanted to solve. And why does it suck? It sucks most and foremost because like it's distracting. So right, like when you fundraise, you have to just stop working. You have to go and meet all the people all the investors as you can and try to convince them. So it's a huge time sink. It's also like completely inaccessible, right? So if you want your users to participate, you want your customers to participate, your partners, well, that's not possible. That's not possible because those equity rounds that companies do, they are reserved for insiders, for professional investors. So it's not an easy way to align your stakeholders with your company. And then it's very dilutive also. So it's very dilutive, which means that like in the end, each equity round of financing that you do dilutes your control you have over a company. And the reason for that is very simple. It's like private capital markets are very intermediated, right? You need to go like the money is out there, but you need to go people who have it. You need to go see VCs, you need to go see banks. And if you want to go the public capital market route, well, you can, but it's also like it's very hard to reach, right? So IPOs, Reg A, Reg A plus, ICOs, Reg CF, STOs, all of those are not easy to pull off. And most of those, the big issue there is that it's like a discrete. At one point, you're going to raise capital and you better succeed. Otherwise, it's going to be an issue. So there's a better way. And this way is what we call the continuous securities offering, right? It's a novel type of offering. And for the first time, like I'd say like in the history of humanity, like entrepreneurs don't have to go and seek for money. So I'm very sorry. Like if you hear screaming, nobody's dying. It's just my kid is somehow screaming. So hopefully it's all right. So it's a continuous securities offering. Basically, for the first time, like you as an entrepreneur just have to focus on your business, on executing your business, and then investors can decide to invest at any single time. So really, it's an offering that is continuous, where people have the opportunity to invest today, tomorrow, in a month, in 3 months, in 6 months. And the twist is, like, the earlier they invest, the better deal they get, but also the bigger risk they take. So Fairmint is this. Fairmint, we are building the first software-enabled financing service to give companies the ability to raise capital and turn your stakeholders into investors. And so very concretely what it means that we enable you to put this Invest Now button on your website. And from that Invest Now button, anybody, your customers, your users, your visitors, your partners, will be able to come on your website, click that Invest Now button, and from there, invest in your company at any single time. So that's really a paradigm shift compared to what exists today. And when you fundraise with Fairmint, so like it's completely non-distracting. So you can remain laser focused on growing your business and just doing what you're best at, right? Which is like talking to your customers, talking to your users, growing your community. It's inclusive. Anybody can participate and get incentivized to your long-term financial success. And it's non-dilutive. It's not based on equity. So that means that you don't dilute yourself as a founder in terms of governance. You don't dilute yourself in terms of equity. So it really, like, we built Fairmint like to be kind of a founder's dream. So concretely, like the product, how it looks like, and I jump in I'll do real quick because I jumped in the demo, but it's really like it's a full stack that we developed like since like a year and a half ago. But basically, so it's full DeFi based, but nobody should see it. So it's a beautiful UX, beautiful UI. Anyone will be able to use it. Like you don't need to be an expert in crypto or to use MetaMask. It comes with full batteries included. So KYC, AML, secondary market, everything is included. Legal and tax compliance also, like we enforce the legal on chain. So we take care of this so that basically you don't go to jail. And we have full like set of tools of economical and simulation. So if you want to get a simulation and get an idea of how much you could raise with Fairmint, like feel free to contact us. We'll be happy to do that. And all of this is based like on the fully open source stack, which is like basically all our smart contracts. So unlike other projects in the space, our smart contracts are fully open source, they're fully documented, fully tested, like fully specified, and we try to make it as easy as possible for other people to reuse them. So if like you don't want to use Fairmint, or if you have an idea and you want to create a continuous securities offering for your project, we really encourage you to reach out to us, and like we'll help you set it up. We'll help you use our contracts to be able to raise funds for your project. And so there's already, I cannot say name, actually. It's not that I don't want, I wish I could, but I don't want to say name. But there's already teams basically that are reusing our contracts, because those contracts, if you want to do a bonding curve, basically these are the best contract there is in the market right now. They are fully audited. And so if most of the teams who are developing bonding curves ended up using our contracts and basing their work on our contracts, because they are very generic and very solid. So Fairmint is really like, just to come back to Fairmint, this issuance and trading platforms that sits right on your website, right? So for the first time, it's like you have your little NASDAQ, but the NASDAQ is embedded into your website, right? So you issue securities automatically, and investors can trade also those securities automatically directly on your website. You don't need to list it anywhere. You're completely self-sufficient. So we create this unique investment experience directly from your website. And yeah, so basically what it means is that like continuous securities offering is a novel paradigm, and we're reinventing what it means to go public. So yeah, until now, like to go public, you needed to have a lot of revenues and then like pay a lot of fees to the Goldman Sachs and the Morgan Stanley to finally go IPO, and then like have a huge burden in terms of legal and audits. Well, so we do this differently. So we let private companies become quote unquote public, because they are not really public, but instead of protecting investors with like a tons of like information, we protect investors directly in the protocol. So here are some more resources if you want to learn more about it. So from very high level, so in our blog, you'll find the most high level explanation. We've published also, and it's a book on Amazon, a continuous securities offering handbook, if you want to dig in. And so it's not technical, but it will give you a very detailed overview of how continuous securities offering works. We have the continuous organization white paper where there's all the math if you're into math and want to check that everything checks. And then all our smart contracts are on GitHub, and are the smart contract comes with the JS library so that you can interact easily with it. Hey, demo time. So demo time. Let me change tabs here. So to change tab, I'm going to do this. I'll take the video. Chook. And I'm going to share screen. So, and what I'm here, because I was in full screen, so I could not see. Let me see first the questions. Very interesting. What is the URL? Okay, thanks, Kate, for putting the URL. So Kate, hey, Kate, she's a sweetheart. She's part of our team. She's our designer. So if you love our design, that's thanks to Kate. Thanks, Kate, for being here. Okay, Mark, how is the liquidity created from your company's contract to buy, sell them? Would you work with orgs like T0 or push this onto Uniswap? So the answer is Uniswap. So when you buy security from a CSO, so it depends on the jurisdiction. We're a US-based company. So if I take about Fairmint, and again, I'm not going to talk about our security, but just technically, so you have a 1-year lockup. Right, so when you buy from our bonding curve, you have a 1-year lockup, and after 1 year you can sell it. So that means that after 1 year, we're going to kickstart a secondary market that's going to be Uniswap powered. And so the liquidity. So basically, we work with market makers who bring liquidity to that market so that people can trade it. So when you invest, what do you get? A share, a token, a piece of a cash flow. So in a legal perspective, what you get is an equity security. So now, what is this equity security? Basically, so we're Fairmint. So Fairmint, for example, when we did our CSO, we said, okay, we're going to put 10% of all our future business, well, at minimum until 5 years, but this can be extended, and we're going to create a market out of it. So then the question is that we ask to investors is how much do you think 10% of our future business is worth? And people invest, and basically the way what you concretely buy is you buy a stake into a reserve that time after time will get this 10% of our future business. So periodically, so for Fairmint, it's every quarter, we're going to take 10% of the revenues we generate and put it in that reserve, which is the smart contract, and people can buy a stake from that smart contract, from that reserve. So that's what you get. So that's a fully digital security, meaning the token you have, because technically it's a token, it's an ERC20 token, really represents the value of what you bought. What's the experience like contractually for the raising team? So as a raising team, the only thing you have to do that we cannot help you with, because we don't provide legal advice, is that you have to do the legal offering. So for Fairmint, for example, we did a Reg D 506C in the US and a Reg S for outside investors. And this is the responsibility of the issuer. So this is not something that Fairmint provides. How would that impact US regulation if it's a company's share? They need to complete KYC to own, trade, a security. So, so the thing that is mandatory, and actually it's almost in every jurisdiction, is KYC. So as you see, well, I would not demo KYC, but yes, people need to KYC, and actually this KYC is enforced on chain. So we use, we basically build on top of ERC 1404, ERC 1404 to provide full on-chain KYC capabilities. So what we enforce on-chain are the lockups and the transfer restrictions. Can you combine traditional fundraising with Fairmint CSO? And if so, how does increasing valuation work? So yes, totally. It's totally compatible. Actually, most of the VCs we've talked to, they compare what we do. They compare a CSO as a crowd-funded type of venture debt, without the crazy covenants that venture debt usually has. But yeah, it's totally compatible. And actually, the great thing about a CSO is if you're in a business where your stakeholders, right? So your outside stakeholders, not your employees or for example, your users, your partners, your hosts, your drivers. if they are key to your business, using a CSO makes a lot of sense, because that means that you can really make sure to incentivize your key stakeholders, the ones that provide value to your business, to your long-term success. And so if so, how does the increasing valuation work? So it's different, because like there's not a direct link between the equity valuation and the revenue valuation, like, because with Fairmint you raise based on the revenue multiple. And basically every time, the great thing about Fairmint is that every time the market deems your value to be increased, like for example, if 10% of your business is valued, let's say $500,000 today, and then tomorrow, like the market says, hey, actually no, it should be valued $1 million. So every time your valuation increases, that's more money that you receive. It's more financing you receive that you receive. It's not like an IPO where basically you receive money on day one and then it's all secondary trading. Here you always have this primary market that is open. Really like this. I just feel concerned about how the SEC would react. Well, yeah, actually, we're inside the box. Like in terms of legal, like we issue, as an issuer, like you issue equity securities. It's securities, and so and if you use Fairmint, because you can use something else, but if you use Fairmint, we come with like all batteries included, so KYC, AML, so you're going to be fully compliant. So, and even on the secondary trading, because even if it's a Uniswap market, if you enable trading on the Uniswap market, doesn't mean that it's permissionless. Like as everybody needs to be KYC, well, that means that everybody needs to be KYC. And even if you want to trade on the secondary market on Uniswap, you would need to be KYC. The only thing that we can do is that we can make partnerships, right? And if you want, like if as an issuer you want your token to be tradable on Binance, then you can say, well, I trust the KYC from Binance, and then all the people that are KYC by Binance then can trade. But I'm going maybe a bit in the details. Does the company must be profitable to go this route? So no, you don't need to be profitable. You need to make revenues and have a path to a path to growth, right? Because a CSO works best if you generate revenue, you have a proven business model, and you have a growth potential. That's where a CSO really shines. And I would say, I would add like this: if, for example, where the CSO is not the right thing to do, you should not do a CSO if, for example, the equity value of your company is based on the number of users you have, or on the patents you hold, or things like this. Like basically, a CSO makes a lot of sense if revenues are what provides your equity value, right? Okay, hey, demo time. So it's 17. So I promised a demo. Let's do it. Okay. So I cannot see you guys, your question anymore. So, but this is what happens when you sign up onto Fairmint. So this is our dev version. So it's even better than the ones that the one that is in production right now. So yeah, so this is where you land. And so as you can see, you arrive on your dashboard. So I just passed KYC. So this is why I'm being told, congratulations, you're now ready to invest. So here, obviously, it's my dev account, so I already did transactions. So by the way, also, like this is on mainnet, right? So at Fairmint, where everything is being developed on mainnet, we don't use like testnet because we just want to know, have the real like production conditions. So this runs on mainnet. So my portfolio of fairs, my transaction history. So what is fair? The fair overview. So this is the fair table. So here you see that on dev, we already sold 150,000 securities, which are security tokens. Total investment 124, and the current market cap. So people here, like in this development environment, have valued our 10% of our business $500,000. And here you can see like a few fair investors that, as an issuer, you can highlight. And okay, so future of financing, a few videos, and then you have like the why Fairmint, right? So this is the part where you can read more about Fairmint, like the business. And so as an issuer here, you can put whatever you want. Also, all this, if you decide to raise funds like this will be all customized to you. Like nothing will be on Fairmint, right? Everything will be on your website, because in the end, you are the issuer. Everything happens on your website. So here it's just that on our dev environment, it's put as Fairmint, but if it was to run for your project, it would be everything, your identity, your brand. Okay, here you get a little presentation presenting exactly like what I'm presenting you right now. Team, and then you have the offering data. Okay, so the offering data is where like you see, so you have different, so here, yeah, a graph should show exactly, the graph shows. So you have the last transaction price and the redemption price. So the redemption price is actually the price that is provided by the reserve. Remember, I told you that periodically, Fairmint is committing, and the issuer is committing a fraction of its revenues into a reserve. So that reserve provides you with like the last resort liquidity. If everything goes wrong and you absolutely need to sell, and where there's no buyers, you can always sell at that redemption price. And so, so yeah, so here you see like that of last commitment, the total invested, number of investors, theoretical exit price, price to reserve ratio. So that means that basically right now the fair trade that's almost 20 times the redemption price. So it's like kind of 20 times our revenues, which is normal. So again, this is like fictitious. So it's on dev environment. But if that was real numbers, that means that people would value the fair token like 20 times the revenue multiple on the 20 time revenue multiple. The CSO parameters. So here I'm gonna pass this, and I'm just gonna show you. So what does the investment experience look like? Because so far, like there's no MetaMask, nothing, and there's really none. So you click on Invest Now. You funded your account. So to fund your account, you can fund it like with so with crypto, obviously, so ETH, any kind of token, even non-Ethereum tokens. You can fund it with credit card, debit card, SEPA transfer, and soon ACH. And here we say, okay, I want to buy for 2,000 worth of tokens. So if I buy this, I'm going to get this amount of fares. Preview purchase. So as we're gentlemen here, like we offer you the network fees, so you don't even have to pay for the network fees. Proceed to purchase. So here's the legal. So you need to accept the CSO subscription agreement. You need to accept the risk associated with the CSO, and then you need to sign electronically. To sign it, hit puff. By now, you wait. And that's it. You're now the proud holder of 1,266 fares, which, so the transaction is building in the background, purchase successful, and so it will soon reflect. Boom, there you go, it reflected. So as you can see, and this you can do at any single time while the continuous security offering is running. So it's really a crazy, delightful investment experience that you can now provide to your community. It's fully compliant, so you don't have like you don't have this problem of, oh, is it a utility token, a security token? No, it's a security token, but it's a very, very well crafted with a delightful UX experience security token. And I guess that's it for the demo. So let me stop that now. And exactly, so I'll take all your questions now. So white label platform to crowdfund. So yes, we don't say, yeah, technically it's crowdfunding, but I think it's more suitable for companies that makes already revenues. So this is why like it's not really a crowdfunding platform, but yes, like it's totally a white label platform that you can have on your website for your project to let anyone who believes in your mission, who believes in your product or your service, come and invest at any single time. So what questions do you guys want me to, yeah, I need to check the ask a question. Okay, ask a question. So did you reinvent the wheel, or is it Ethereum based? I love the question. No, we did not reinvent the wheel. Like it's full Ethereum based. Like on the background, like it's all as I said at the beginning, it's all DeFi. So we use non-custodial wallets, and we use a stable coin. So obviously here It was based on USDC, but you can you can use as a base currency whatever you want. If you want ETH as a base currency, you can use ETH. If you want any token, so any ERC20 token, you can use it. So yeah. So, but no, yeah, I don't think we reinvented the wheel. You mentioned that what sort of company would not be a good fit for a CSO? If you could pick an ideal first customers company for Fairmint, who would it be and why? Coinbase, if you're here, let's do the CSO. Like, you cannot do IPO right now, right? You can, like, it's blocked. The window of opportunity is gone. So let's do a CSO, Coinbase. Come on. Availability in Europe. Actually, I cannot communicate on that right now. But yes, like we've signed our first projects, and most of them are in Europe. So totally available in Europe, like more than anything. Because in Europe, the thing is in Europe that there's not this accreditation rule. So in the US, if your project is in the US and you think that all your community is in the US, I'll be like totally transparent here. You still have the accreditation rules, right? So that means that you would need to wait 1 year once the secondary market kicks off, so that non-accredited investors can participate and buy tokens. The first year, there's only the bonding curve running. Non-accredited US investors cannot invest. And so in Europe, you don't have this problem. In Europe, like, anybody can invest. Obviously, you need to block non-accredited US investors. But so yeah, definitely available in Europe. You said CSO would make most sense for project with cash flows. So it seems it's not for early stage startup and not for crypto startup. Is that correct? Super good question. Because one of the key things here is like, you need to trust as an investor. You need to trust that the company says the right revenues and honors its commitment in terms of revenues, right? So this is also that's true on the early stage side. We try to not serve early stage companies because there's too much risk. But there's a lot of companies where, like, if the company is big enough, you can trust the company that it will not fool around. If the company, for example, like is a store on Shopify, like Shopify verifies the revenues. And this comes to your questions. This is why I go very interested in actually crypto startup that generate on-chain revenues. Because if you generate on-chain revenues, then, well, people don't need to trust you guys. Like, it's fully auditable. People will see what revenues you make. And actually, you can actually put basically using a CSO, if you make on-chain revenues, is so easy. Like today, let's say you make your revenue and you point your revenues to your wallet. Here, instead of pointing the revenues to your wallet, you would point your revenues to the CSO smart contract, and the CSO smart contract would immediately transfer what needs to be transferred to your wallet and the rest to the reserve. So it's like so simple. It's ridiculous. So if you have a crypto project that is generating on-chain revenues, come talk to us. Even if you're early, doesn't matter, because you're early, but you're making on-chain revenues, so people will trust you guys. Is it time bound? When would investor expect returns? So it's not time bound. So technically speaking, so you commit, like, for example, I take the example of Fairmint. We said, okay, we're going to commit 10% of our business over the next 5 years at least, right? And the at least is super important because we always have the opportunity to extend it. And so as an investor, you can expect return in two ways. You can expect return first when you sell in the secondary market, right? Because if you sell against the reserve is like your last resort liquidity. So it's cool to be able to sell, but it most likely would not be the highest price you can get. The highest price you can get would be on the secondary market. And so you can sell in the secondary market, or let's say in 5 years, like Fairmint decide to close its continuous securities offering, then we have to pay an exit fee. And this exit fee would be should be sufficient so that any investor, all the investors who bought Fairs, can exit at the latest issuance price. So for investors, it's pretty cool. So but this is why, like, the rationale here, what we're expect to happen, but might not happen, right? It's just that the goal of a CSO is to be continuous. So even though there's a minimum time, the goal is, like, if everything goes fine, the CSO should continue. Can you describe the tech stack? Are you using IPFS, request network, or very interesting. So no, we're trying to be, like, honestly, for this first release, we did not go super deep into tech, we were trying to nail the interface, right? To make something that is really frictionless. So right now we're using Upvest. It's a German company for non-custodial wallets. This is what provides us with this nice. Maybe we're gonna be cut. So yeah, Upvest, and then like we're using Block Native to monitor transaction on chain. We're using Dune Analytics to monitor our smart contracts. But other than that, we're like a full serverless AWS stack, so that no server, full serverless, and yeah, React.js application. What if those on-chain revenues are on non-Ethereum blockchain? Well, then it's a problem, because we're technically, a CSO can be blockchain agnostic, but that means that we would need to port the smart contracts to this other blockchain. Right now, we only support Ethereum. So that means that you could run a CSO on Ethereum, but then you would act, well, I guess it's still good, because even though like you cannot derive your revenues directly to the smart contract, people will still be able to audit your revenues on this other blockchain. So it kind of works.
All right, so I think we're out of time. Thank you guys so much. Do you mind dropping your Twitter handle in case they have additional questions?
Sure. Hey, hit me up anytime. Here's the Twitter handle. Thank you so much, guys. It was great. Great questions. Thanks so much.
Yeah, thank you. All right, take care.